Hello, welcome to Mornings with Michael for information and educational purposes only. This is the weekend edition, so let us go on. Our word of the day is jocose, playful, or humorous. Jeanette was looking for a jocose writer to work on her sitcom. On we move to the markets. This is the hourly look at the Dow Jones Industrial Average. Right now, futures are trending up, but this was Friday and could have been any index because they looked all about the same. They had lower highs and lower lows, which is kind of a bearish kind of look. That was Friday's action. And looking at, this is a 7-point trading list from Sticky Trades. And kind of all the candles are bearish. Kind of a bearish Harami. We'll go through all the candles later, but the volume was in a bearish. There was big movement above the 20-day moving average. There are gaps below the market that are looking to be filled. Stochastics are turning down. CCI is turning down. And there's a role reversal from divergence above or below the resistance. So that is a look at our trading checklist. And so here we go. What do we got here? We got a hanging man on the Dow Jones, and we got a gap down, and it's maybe not quite a gap down here, slight gap down, and then traded on its lows, and volume was lower, flattening out on the stochastics, and the CCI is trending downward. Take a look at IWM. Once again, we got a hanging man right over here. Take a look, hanging man right over here. What happened? The market trended down. This is I believe this was not sure if this was in August or not, but we had a big gap down and it's come back up. What do we got here? Looks like a hanging man right over here, and the market trended down for some time. So just want everybody to be aware of that. We go on to our next screen, which is the NASDAQ. The NASDAQ, we got a doji here. Needs more information. And then we got a hanging man here. Let's go back over here. Hanging man, what happened? The market trended down for quite a bit here. I believe this was in August. Trended up here. Sold off for the first 2 days in September. Well, I guess this is a weekly chart. Then it bounced back up. So let us go over here. What do we got? This is the S&P 500 on a monthly basis. This was August. We got a hanging man. In August, what happened the first 2 weeks of August? We had a big sell-off in August. And we got a hanging man here on the end of September. Actually, the end of August, we saw some big selling the first few days in September. We got out of the way out of that, thankfully. And this is not looking good for October. So it's come up to our target, and it's got a hanging man on lower volume. So let us move on. This is the S&P 500 daily. This is a shooting star. If it would be down here, it would be an inverted hammer, which would be bullish, but this is bearish. This is a doji here, and we got a hanging man right here on lower volume than on the selling. As you can see, this is bending down, and this is turning down, so the stochastics are bending down, and the commodity channel index is turning down. We move onward and upward to the VIX. The VIX, we didn't have our target, so let me just bring out our targets for all the indexes. So for the Dow Jones, target 452, 212.78 for the small caps, IWM Russell index. On the NASDAQ, it said 464.86, and the S&P 500 is 555.88. And on the VIX, our target is 2068. If this pops up to 2688, both of these are hitting the bottom of their channels here. Looks like they're getting ready to turn. So that is where we are on the VIX. If this bounces up, then that means the S&P 500 is pulling down 99.95% of the time. Every once in a while, it does go up, and then the S&P 500 goes up at the same time. But that is the story there. This is a chart of gold. Look at this. This is really a nice cup with a handle formation. Gold is shot up here. Often you can take the depth of the cup, and that is, and you just take this line, put it above the breakout area, and that's where you can target how much of a move it's going to make once it breaks out. As you can see, it's still heading up on the stochastics. We got a divergence of opinion here on the commodity channel index. It's turning down, but it does look like it's about ready to turn up. So all of that is looking bullish on gold. So moving on, here is some news about the markets and our economy. Look at this. This is the kind of divergence you don't want to see. Credit card debt is at record high levels, levels that we just haven't seen before. And savings rate has just hit a record new low. So how are they going to pay all their credit card debt? If they can't pay their credit card debt, this is going to hurt banks even more. With savings at a record low, they've gone through all of their savings. So that is that. This is a game of trades looking at the effective federal funds rate. So this was in 2000. What happened in 2000 after they dropped the Fed funds rate? Well, the market just went into a big time tank, and this gray area, that's the recession. I believe that's 2001, 2002. Once again, came up here. This is when the Fed started cutting rates. Another big recession here, one of the worst that we've ever felt, 2008. We've been talking about the numbers. They're much worse in 2008 on a number of areas. So, watch out below. And here they cut the rates. And shortly thereafter, the pandemic followed. So can't really say that cutting the rates caused the pandemic, but it's just something to keep in mind. And right over here, they've cut rates. And I would say keep on your eyes open and keep on the balls of your feet ready to act. If history has anything in the cards, what happened over here right before they cut rates, market was at all-time highs, and it came all the way down here. And then what happened when they cut rates over here? 2007, they were at all-time highs, and it came all the way down here. Just talked about how they cut rates right before the pandemic. And markets at our all-time highs right here, and they've just cut rates. So that's why we're counseling everybody to be on their toes and be careful. JP Morgan CEO Jamie Dimon warns U.S. economic outcome could be worse than a recession. What's worse than a recession? An extended recession. call it a depression. So that is what Mr. Diamond is forewarning us. This happened on Friday. So FedEx had a move, expected move in the options market of a move either up or down 7%, went down double. That expected move was down 14%. I believe it was down $42 on the day. That is not a good sign for the economy. Transportation is what moves most of our economy, all the goods and services people are buying. FedEx is down. Well, UPS was down as well, and other shipping companies were down as well. This is transports, and if you go with Dow theory, transports need to be heading up for the market to continue to do well. And look at this big move. Look at that big bearish harami. And look at all that volume there. So it wasn't just FedEx that made that move. We got a turn down in the stochastics, and it already had turned down in the commodity channel index. So I would keep an eye on the transports. Ticker symbol for that is DJ Dow Jones T, DJT. So not Donald J. Trump, but Dow Jones Transports. So here we move on. Look at China's real estate stocks are back at the 2008 lows. And whatever affects China eventually has an effect on our economy. It's now at a lower low than it was in 2008. So that is that. And what does World War III look like? Well, Putin said last week, long-range arms from Kiev would mean NATO countries are at war with Russia. That includes the US and Britain, and this all could lead to World War III. Once he's said it, he can't take it back. So we will just have to see this. Is this going to be an October surprise or what? So that is something to be careful about out there. And let us move over to, if you're at all concerned about all the wealth that you built up over the last lifetime, this might be somewhere you want to move. It only goes up. When the market goes up, does not come down when the market goes down. Goes up and goes up. Beats index investing by about 5% per year. So there we are with that. And now let's go over to take a look at a few of the stocks here. This is SPX Technologies. I'm going to shrink this and bring this over, make sure everybody can see this. And just take a look at the top performing issues here. Back on the screen. As you got a double bottom right over here, kind of odd shaped double bottom. Tried to break out, pull back down, and it's right near the pivot right now. They make cooling systems, power transformers, low technology equipment, industrial products for various markets. Their earnings are supposed to be up 28% this year and 12% up next year. Earnings per share is at 95 out of 100, so they're beating 95% of all the companies out there. Primo Water is already broken out. Relative strength against the S&P 500 is 94. Their earnings are supposed to be up 56% this year, another 8% next year. The Zebra Technologies kind of took a hit over here. It's working on a base here. We got a base, tried to break out right up here, pulled back. So this is a base on base. Earnings are supposed to be up 30% this year, another 21% next year. Constellation Energy is up a little over 22%. Maybe struck a deal with Microsoft, provide renewable energy for all their AI, which is taking a lot of energy, so they popped up quite a bit. Third Harmonic Bio, working on the right side of its base. We've got a lot of negative earnings, negative 42% and negative 33% next year. Is up 2.24%. Louisiana Pacific manufactures OSB, siding, engineered wood products. They have broken out here. Got a kind of flat base here. Got third flat base. So this is kind of a base on base over here. Earnings are in 37 days. We got Semtech. Looks like we got a double bottom here. 27.25 kind of undercut 27.52. Place to buy would be 37.57, right over in this area. And you'd have an early entry and you could be adding to your position right here. AB Home kind of took a dive on Friday, had a big bounce into the pivot and then pulled back. Earnings are supposed to be up 19% this year, another 5% next year. Coherent. Earnings are supposed to be up 74% this year, another 47% next year. Makes modular laser processing heads, fiber optic cables, ultraviolet filters. And they break out here. We had a pretty tight stop and we got stopped out of it. And it is moving through the pivot right now. Arista Networks, doing a lot of work with data centers, especially in AI, has hit the pivot point. So this had a double bottom here. Middle of the W pattern would be at 364.25. And right now it's at 384.46. So if you had bought right there, it would be potential add. We have one more we're going to take a look at. Spotify Technology. Luxembourg-based company provides music streaming subscription to 184 countries. So we got a base on base here, 1, 2, and now 3. It's broken out into the pivot. Look at these earnings. Up 315% this year and up another 40% next year. That is simply amazing. So that's kind of our quick look. This has been our weekend update. We'll keep you updated on how the market is shifting. Quickly did not look at the Bitcoin. I guess we can stop our share. We'll bring it up right on up. We'll reshare this. For the moment, it looks like Bitcoin is risk on. Pull back to 63,000. And ever since then has been trending forward. Over 64,000. Still pulling back a little bit right now. We'll just see where it ends up tomorrow. We do have position in BitX, and then we're selling short the forward calls at a much higher level than Bitcoin is at. So that's how we're generating some extra income. So that is our show for tonight. Hope everybody has a great day and have a great start to your week tomorrow morning. And we'll check in with you then. Have a great day. This is Mornings with Michael for information and educational purposes only. We show things for illustrative purposes only. You need to do your own due diligence to find out what works best for you.